Hi, we're talking about Your Money Matters on NDTV Profit because we get it. Your money matters. One of the big worries that we have as we grow older is how to care for our old age. With medical costs rising, the concern is that we won't be able to afford the best treatment. How do you leverage what your parents have built over their lives? Should you be buying health insurance yourself? What's covered and what is not? And should you have a separate emergency fund? We're going to talk about all of this and more on today's episode so that you can put some of your worries to rest. Joining me on this conversation is Harshvardhan Roongta, the co-founder of Roongta Securities. Harsh, thanks as always for taking the time and pleasure having you. Do you think that this is one of the foremost concerns that people have once they cross that 30, 35, actually more towards the 40 age group, where people start then thinking about parents that are now moving into that senior citizen range?
Yes, absolutely, Alex. So let's understand the age demographics of an individual. So by the time you're in your 30s and say early 40s, you will have multiple responsibilities on your side. Okay, so you will be probably at the prime of your career. At the same time, you'll have children who are now eligible to go for higher education, or you'll have some expenses towards that. You will have a housing loan or something that you'll be providing for already. And in addition to that, you are in that age bracket now when your parents, as you rightly mentioned, would be in the senior citizen category, and they would be requiring additional, kind of support in terms of medical treatments and the cost related to the medical, treatment or the medical condition that they'll be undergoing. So yes, it becomes a prime issue for people in the age bracket of say 35 to 45 when multiple responsibilities come on you.
Okay, so clearly the option is to start planning for this before you hit that stage. And I myself have had conversations with my sister about it. And when I was around that 30 age, right? So we started apportioning a little bit of money towards that. But the thing is that if you've already hit that mark, what are the primary responsibilities that you should prepare for? Because ultimately, first you have to identify what you would need to spend on, right?
That's correct. So, if you typically look at a senior citizen, medical issues that we may be trying to address. So, one would be, of course, if there is any hospitalization. So, that is one condition that you need to be prepared for, irrespective of how healthy a lifestyle you're leading. I mean, only thing that you can do is postpone your medical expenses. God forbid anybody has to undergo some serious ailments, but if there is any such a requirement, then hospitalization is going to be one such expense that you need to be providing for. The other would be regular medication and consultation. So, outside of hospitalization, on a regular basis, there would be medication, there would be doctor consultation, there would be a lot of other things happening, which on a regular basis, these are not going to be reimbursed by any insurance policy or so, but there are going to be a lot of medical expenses on those kinds for medication, etc., as I mentioned. And these medications, and when I refer to these regular medications and consultations, they will not be covered into any medical policy. The third thing that you need to provide for is any special equipments or such as a hearing aid or wheelchair, or you need to modify a house in particular manner for ensuring that minimum, impact, or, there is some, your parents are going to be comfortable with the requirements that they have, or you may need a full-time attendant to look after them. So these are the things essentially that you will need to plan for early on itself. So if you're in your 30s right now, why don't you possibly think of a situation like this, and your parents are say 50, for example, they live with you, or you need to take care of them. You could most possibly think of situations that you need to provide for say 10 years or 15 years from now, and possibly plan for it.
That's a good point that you make. But then uh, the question mark is, how much do you anticipate that you will need? Is there a ballpark? And of course, you're talking about a different figure that you will arrive at depending on where in the country you are, because in certain pockets, it's going to be more expensive than in others.
Absolutely right. So, in fact, let's break this down into two parts. You said we're trying to look at what is the quantum, right? So, there is one quantum that you can take care through a Mediclaim policy, through a health cover. Okay, and the best time to buy that health cover would be well in advance. So do not wait for your parents if they don't still have a health insurance. Ensure that they have adequate health insurance. By adequate, I mean that you should at least, in today's times, irrespective of the city that you're living in, suppose you're in a tier 2 or a tier 3 city, in today's times, I think you should still look at having a cover of at least 20-25 lakhs. If you are in a metro and where the health costs are much higher, then you would need to at least have a 50 lakhs to 1 crore cover for that matter. So just ensure that you have adequate health cover. Now, one more definition of adequate health cover. Most often we see when we interact with our clients as well, I mean, they say that 10 lakhs, 15 lakhs is good enough. So if 10 or 15 lakhs is good enough today, is it going to be same for next 20 years? So suppose, Alex, I speak to you and I speak to myself as well. I say that in today's times for us also probably 10 to 15 lakhs cover may seem fine. I'm not saying it is sufficient, but I'm just saying it may seem fine. Look at it like this. Is 10 to 15 lakhs going to be sufficient 20 years hence from now? It's not going to be. So what we normally recommend is that you buy a higher cover today itself in anticipation of a cost that you will incur 20 years from now. So why I'll give you a couple of reasons. One, because you need to buy insurance when you're perfectly healthy. That's the best time to buy it. Today, possibly you are good in good health. Secondly, if there is any pre-existing ailment that gets excluded for a limited period of time after taking a policy, there's a great possibility that if you have a critical ailment, you may not get an insurance at all. So do not wait for health costs to go up and then you simultaneously increase your cover. Your health condition may not be in such a situation that an insurance company may not give you a cover at all. So just look at futuristic value of medical expenses and buy a cover today. Another thing that you need to be mindful of that you can buy a higher cover at a very reasonable cost. I wouldn't say low cost with a combination of a base policy and super top up. So if you do a base plus a super top up combination, you can go to a 1 crore cover and at a very reasonable cost as compared to buying a 50 lakh or a 1 crore base policy. So just understand these nuances of a base and super top up and try and buy a maximum cover as of today. With regards to the other element of your parents' expenses that we're talking about currently, so one aspect I said you can make provisions through insurance policies. Then the other part is which is not covered by insurance, which is your regular medication, which is your checkups that you would do, which is outside of hospitalization. So a health policy will pay you costs which you incur for an hospitalization and pre-hospitalization and post-hospitalization. So anything that you've incurred for that treatment, probably 60 days prior to hospitalization and 180 days post-hospitalization. These number of days depend upon the policy that you have, but broadly, I'm giving you an example. But what happens in cases where there is no hospitalization at all, but there are regular checkups required, there is medications to be bought, there are doctor checkups and follow-ups. So there'll be a lot of things to be done. So there is a considerable amount of cost you will incur for those things, for which you can also create a corpus. So this is the nutshell of what you would be looking forward to if you have parents who are aging.
Yeah. Not to sound alarmist, Harsh, but I've just heard over the last, or witnessed, in fact, over the last few days itself, situations where people have had to be put on ventilator support. And I was looking at some of the charges that are incurred in Mumbai itself, and it could go anywhere between 8,000 per day to 28,000 per day. And it's very, very significant. So what I'm trying to get at is that you're talking about a situation of a week in certain cases where you have to have ventilator support, and hopefully things get better. And I'm glad to hear that in the recent past also things have gotten better. But some of these numbers sound incredibly alarming, right? Because you're talking about a situation where you need to provide care immediately, and sometimes you can't wait for the health insurance to kick in. You have to move and move quickly. So how do you deal with that spur of the moment thing? And we'll get to the saving of the corpus in just a bit.
So, Alex, this is a very bitter truth that all of us live with. And, when it concerns life, especially of your parents, I mean, you would want to ensure that you get the medical help immediately and not waste any further time. I am more concerned about a situation where there is no health insurance or the health insurance doesn't cover the required treatment. Look at it from that angle. So, in case there is a health insurance policy, there is immediate requirement of any medical attention and you need to rush to the hospital, there is still a provision to go for cashless and all those things. But anyways, what is more important is that you should have adequate money available to save the life of your parents or any of your family members for that extent. So you don't want to be guilty of a situation where you couldn't provide for a appropriate or a correct medical treatment, and because of which there was some loss of life. I mean, you won't be able to forgive yourself for the rest of your life. So just ensure that you have adequate money. Now, adequate, of course, there is no definition to adequate. Look at your family members, look at the family history, prioritize creating a corpus for medical emergencies so that if at all there is a requirement, you should have that money to save the life of your family members. Now, would 10 lakhs be sufficient? Would 20 lakhs be sufficient? I really don't have a real answer to this. You just have to ensure that you have access to money and liquidity if at all there was a situation like this where you need money immediately, and insurance may come in later on if at all there is. But there needs to be immediate attention, which you try to highlight. Yes. So prioritize this equivalent to emergency funds and ensure that you have adequate money. Now, how much is adequate? I think each listener here would be able to possibly judge
Identify.
for himself.
So, himself or herself. Harsh, so therefore we've established a couple of things, right? One, you need to start this well in advance. Two, you need to get a medical cover as early as possible. And I have a follow-up on that. And the third, you need to have a medical emergency fund, which is separate perhaps from the contingency fund that you've always set aside for yourself and your immediate requirements. This is something that you perhaps want to bolster as your parents grow older. But on the medical insurance part, you continue to hear instances where certain claims are getting rejected, where pre-existing conditions, there is a problem down the line where the insurance service provider says, hey, this was not disclosed, or there is a waiting period. A lot gets captured in the fine print, which frankly people don't read. So how do you go about planning for these things? And is that also why you're saying getting a policy early is better? How long do these policies go for? Because I've also heard that after a certain age, it becomes very difficult for you to get medical insurance for your parent.
Okay, so I'll break this up into a couple of parts. Okay, the first one being, when should you buy an insurance? So, of course, buy it as soon as possible. Okay, the earlier you realize, suppose you've heard this today and your realization has dawned upon you, buy it today itself. Okay, don't delay any further. Don't regret that why didn't you buy it 5 years earlier. Okay, what's done is done. Just buy it today as soon as possible. The second element of pre-existing ailments. Yes, so in case at the time of buying a policy, you're already contracted of certain ailments. Those are defined as pre-existing ailments, which means that you're going to apply for an insurance today. And if you're already suffering from any ailment or you had past hospitalizations, all that you're supposed to declare in your proposal form. So when you're filling that proposal form, there's a section asking you for any existing health conditions, hospitalizations, etc. in the past. It is the onus of the proposer, which is the person intending to buy the insurance, to declare that honestly to the insurance company. Now, having declared everything honestly to the insurance company, the insurance company will have a couple of things that they will do. They could either one refuse to give you an insurance at all, considering if there is a critical ailment which the insurance company's underwriting guidelines do not permit to accept, they could possibly refuse to give you the insurance cover completely. They said like, oh, hey, we don't want to insure you at all. On the other hand, I mean, if there is an ailment which is within their underwriting guidelines to accept, but with an extra premium, they may come back to you and say that, look, we're going to charge you a loading, which could be 10%, 20%, or whatever amount. So suppose you're paying 10,000 premium and they say there is a 10% loading, they will say we charge you not 10,000 but 11,000 rupees to provide you the same cover because the risk is higher. And they might also introduce a waiting period, which means that first 3 years of buying the policy, any treatment relating to your pre-existing condition will not be paid for. So there are two things that will happen, as I said. One is that they could load up the premium and accept the policy with a waiting period, saying that first 3 years they will not pay for any treatment that happens for pre-existing ailments. Post 3 years, all your pre-existing ailments will be covered. Now, coming to a point wherein there is a moratorium period introduced, which says that if the policy has been in continuous renewal for at least 5 years, then the insurance company cannot reject a claim even for pre-existing ailments unless it is proven to be a fraud. So these are the reasons. I'm not going into the minute details of these guidelines, but the moral of the story that we're trying to achieve is that the earlier you buy a policy when you're healthy, all these probabilities are kicked out of the window for you. You are healthy. You bought a policy. There is no exclusion, no waiting periods, no pre-existing ailments. And if you've insured yourself for 5 years and beyond continuously, then the likelihood of your claim being rejected almost become nil as per the guidelines, unless the insurance company is able to prove that there was a fraud that was committed. So, what is it that you should be keeping in mind? As I said, if today is what is the day when you realize that you don't have a health cover and you need to buy it, please buy it today, right now. Okay, so that you don't delay it further. The advantage is being that you will have passed that 5 years, 6 years before you turn senior citizen or before the claim comes in, so that there are no doubts on the claims being paid to you.
Okay. Now, the argument that I've also heard, Harsh, and you alluded to this as well, is that obviously as you grow older, the cost that you have to pay as premium rises. And so the argument that some people make is, I'm setting aside the amount that I would need or that I could possibly claim as health insurance through that cover, and what I would normally pay as a premium, I'm using to bolster that fund itself. Because it's essentially a sunk cost. Your premium is a sunk cost. You want to create a large enough corpus, and since so many things are not covered in that policy itself, you want to create a nice big corpus for you to treat certain conditions. Is that the wrong approach or the right approach?
So see, Alex, it depends on what is your financial status. Like, okay, so let's understand the situation. If you're a billionaire, okay, you are a Mukesh Ambani, or you're a person with a net worth of 10,000 crores and above, then a 1 crore policy doesn't really make any difference to you, right? Because ultimately, even if you buy a 1 crore health cover, it's essentially going to be reimbursing a cost up to 1 crore in a year. So unless you are in that financial position that you don't want to get into the hassles of making a claim, etc., and you have enough money to take care of your health costs, then you don't need insurance. But I guess more than 99.9% people listening to us or in India are not in that category. I mean, look at it like this. So I'll give you an example for that with numbers for that discussion that we're having. So say hypothetically a person pays 50,000 rupees per annum as premium and has a cover of 10 lakhs, hypothetically. Now, if he pays 50,000 every year for 20 years, 10 lakhs as a corpus will be accumulated. So you say that why should I take a 10 lakh cover, pay 50,000 rupees? Might as well keep setting aside 50,000 rupees in an SIP. Over probably 10 years, this amount will become 10 lakhs by itself. Now, look at it like this. If there was a hospitalization and one claim comes for 10 lakh of rupees, your entire corpus accumulated gets exhausted at that point itself.
Yeah.
Whereas in a health insurance policy, this 10 lakhs is an annual limit, which means that you have spent 10 lakhs in year one, and next year again, if you have hospitalization, you've paid 50,000 rupees as premium. But next year again, if you have any hospitalization, your full 10 lakhs limit is again available for you to claim from. So it's an annual limit of 10 lakhs that you're insuring yourself for, which I think is a great advantage in comparison to creating a corpus for 10 lakhs. So look, if you do not get insurance because of a health condition, then you have no choice but to create a corpus.
Yeah.
But if you're in a position to get health insurance, then you must most certainly look at buying that health insurance policy. Do not look at the premium as a sunk cost. I mean, it is an investment for peace of mind. Again, in a long-term perspective, if you're paying 50,000 per annum, over 20 years, you're going to be paying 10 lakh of rupees. Now ask yourself, in the next 20 years, isn't there going to be any instance of any hospitalization across all your family members equivalent to 10 lakhs or not? So hopefully it goes a waste. Insurance premium best gone waste.
Yes.
But if you have 4 people in your family and you're betting on the odds of not getting anybody hospitalized or any claim occurring in the next 10 years or 20 years, then your cost has gone down the drain. But it is not going to be so. And if it goes down the drain, the best thing that could happen to you.
Harsh, which is why in conversations that you've had with me over the years, you have said, go get health insurance before you start investing. It's the first thing you should do. and it's good advice, I think. The one aspect of this is that perhaps if you start saving for this eventuality early enough, you can use proceeds of that corpus itself to pay out your insurance premium, can't you? And from that perspective, if you have this amount that you're starting now for the next 10, 15 years, how should you invest it? And I want to speak to you about the way that certain people invest, which is to say that if I'm likely to spend more on certain things and everybody else is spending on these things as well, why don't I invest in the companies that are providing these services? And from that perspective, I know it's a sectoral thematic scheme, but if you include this as part of your corpus within the limits that you yourself and several of your peers prescribe, then a healthcare fund is something that you can consider, isn't it?
So see, let's look at both separately. Okay, so one is that you're looking to provide for contingencies. Okay, so there are, as I said, many expenses which are not covered within Mediclaim policy. So a Mediclaim policy kicks into effect only if there is some kind of a treatment to be taken in a hospital to begin with. Okay, I'm not talking about daycare, home care. Let's leave that aside for a moment. So if there is an hospitalization, pre-hospitalization expenses up to say 60 days, post-hospitalization expenses up to 180 days. So this period you get paid, you get reimbursed for all the expenses that you incurred. Now, what happens for treatments or general checkups that you take beyond this pre and post hospitalization? That needs to be provided for. So there has to be a corpus that you have to create in any case, as I mentioned. You may have a full-time attendant given to assigned to your parents to take care of them during the day as well, and that is not covered under Mediclaim. So there is going to be a requirement for medical corpus to be created. Now, how to create that corpus? So now look at it separately. Do not, of course, I mean, if you're bullish about the healthcare sector, assuming that you are spending, others are spending, you understand the financials of the healthcare sector, you understand all the other nuances, then you may allocate to a healthcare fund. Not merely because you're likely to spend in a healthcare, going to spend towards a healthcare cost and a company is going to benefit out of it. That is why you're investing into a healthcare fund. No, not that way. So it's an independent decision. You could invest in a diversified fund and get the benefit of a corpus. You don't need to necessarily be in a healthcare fund itself.
Yeah, the profit maximization is not the ultimate objective, is what I get from that. And so diversified fund or even a hybrid fund, would you say? Or would you, if you're starting early enough, you can do equity and then switch it over to something more conservative? Is that the right approach?
Yes, so now look at it independently as an investment product. Okay, so if you are saving for something which you require 10 years from now, so this is a health fund. It's a health fund, but you really need it after 10 years from now. So in the first 10 years, you could invest into equities for sure, because equity is a product for 8 to 10 years. So if your time horizon of creating that corpus is 10 years and beyond, so then you will most certainly create that corpus through an equity fund. However, if your parents are already senior citizens and you already believe that this kind of expense could be incurred even next year from now, then you would possibly put in a liquid fund or a debt fund or an overnight fund or an ultra short term low duration fund. Because as you rightly mentioned, we're not trying to maximize profits. We're only trying to make sure that we have corpus available as and when required for medical emergencies of our family members. We can withdraw out of it, use it for that purpose. That's the only objective. Do not try and maximize return saying that, okay, let me still put it in equities and try and make the most out of it. No, that's not the idea. So understand what are you trying to do, what is the time horizon you have before that requirement, and then accordingly choose an investment product. It could be equities, hybrid, debt, depending on what is your time horizon.
Okay. Last question. While we're on the topic of healthcare funds, how have these done, and what is your own advice when people come and ask you, should you invest in a healthcare fund?
So see the returns that you may expect, the returns the healthcare sector, particularly if I may look at the BSE healthcare index, that gives you a representation of the entire segment altogether. If I look at the returns, a 1 year return has been approximately 20% annualized, of course, and I'm talking a 3 year return is 20, a 5 year return is about 23% and CAGR. So yes, the healthcare sector has given these kind of returns, but that does not mean that you look into a healthcare fund to say that I need money after 1 year. I'm going to be particularly paying to a hospital for something. Might as well invest in a healthcare fund which buys into that hospital. So I don't think that's the right annotation. You have to look at it as a pure investment product. choose the product, choose a scheme depending on your time horizon and your requirements and your goals, basically, not as per the returns that the particular scheme has generated.
100%. And as we've all seen post COVID-19, these schemes and these sectors move in cycles. And so they're quite liable to underperform in a given period of time, especially if they've outperformed in the recent past. So don't go by those past returns. Harsh, as always, thank you so much for taking the time and for speaking to us.
My pleasure, Alex. Thank you for having me on the show.
All right, that brings us to the end of this edition of Your Money Matters. Hopefully this has been beneficial to you. Do stay tuned. Lots more coming up on NDTV Profit.